What's going on, everybody? So in today's video we're going to break down everything you need to know about reading a candlestick chart. So right now I'm on the Thinkorswim platform by Ameritrade. We're looking at Tesla right now. So starting off, there are going to be multiple time frames, and it's important on which one you choose based on how you're going to trade. So what I mean by that is right now I'm on a daily chart. So each one of these little candles right here represents one day. So you can see this started in September of 2019 and it ends in August of 2020. So we're going to come in to the 1 minute time frame, and now we can see that it's much less time, right? And what I mean is it started 2 days ago and it ends, well, today. So let's get into how to read these. The good thing about candlesticks is the read is going to be the same for every single time frame. Alright, so let's get in, zoom all the way into this candle right here. And let me pull up some arrows so I can make it pretty simple. Okay, so a red candle, you can customize your color, but red for me and for it's just the standard, red means down. So these top and bottom, these are going to be called wicks. This is the lowest point of the candle, and this is the highest point of the candle. So within the minute, because remember, each one of these little candles is 1 minute. So within the minute, the candle came down and hit a low of 1877 and hit a high of 1884.57. Well, not 57, 70. But you get the point. Now, this top, this is called the body. In between is the body. So this right here is the top of the body, and this is the bottom. So what that means is, at the open, 740 is when this candle opened. So at 740, the candle opened right up here, and it hit a high of the top of the wick, it hit a low of the bottom of the wick, but it closed down here. So with red candles, it's always going to be the top of the body is the open and the bottom is the close. But with the green candles, it's the opposite, right? Because the stock went up. So right here, for this green candle, let's go to this candle, it's a little bigger. So for this candle, right here, this was the open, and this was the close. But this is still the high, and right here is still the low. Now the reason it's different is because now the stock is going up. So it opened down here at about 1883.50 and it closed up here at around 1891.12, with the low being down here at 1882.20 and the high being up here at 1892. So that might be a bit confusing, and if you have any questions, you can leave them in the comments down below, and I'll make sure to respond to you. But yeah, so that's the basics of a candle, and the great thing about it is it works for every time frame. So that's each one of these candles is 1 minute, and you can now see what a 1 minute candle is like. And if I were to come out here to a daily candle, let me just clear this drawing set so we get rid of those arrows, we can add some more. So now that we're on a daily chart, same thing. The only difference is each one of these candles is 1 day, but the process is still the exact same. So, I mean, right here we have the open of the candle, the close of the candle, the low of the candle, and as you can see, this is a great example actually. As you guys can see, there's no high of candle right here. There's no wick on the top. You see how this one has a wick up? There's no wick going up, which means it closed at the high of the candle. So if it closes at the high, there would be no wick because it closed at the high. And if it closed at the bottom, then there'd be no wick at the bottom because it closed at the bottom. So now that you have the basics of a candlestick chart, let's get into a few patterns. So one of my favorite patterns and one of the most well-known patterns is a bull flag. So looking at Kodak, we're going to be looking all the way to the right here as I kind of keep moving it forward. We're going to go over what a bull flag is. So right here, and how to trade it, more importantly. So let's start off right here on the 1 minute. As we can see, Kodak was selling off, but now Kodak's starting to pick up. So we're going to look to maybe get in at a good entry. So Kodak's pushing up, we're gonna see if we can get a better deal because it is a bit overextended right now. So we see Kodak's pulling back a little bit. We want to see a little bit more. And now you see how right here, this is called the topping tail, right? The wick's really long. It was trying to push up. It kind of started to lose volume and it just came down a little bit. So then we got a big red candle. This is bigger. And then we got a smaller red candle, which shows lower volume again. Then we got this really big green candle signaling very strong momentum to the upside. So this is a bull flag, but this is a micro pullback. This is a very small pullback. You can get these little ones or you can get these big ones. This right here would be more of a 5-minute setup, and this right here is a 1-minute setup. So let's say we got in right here, right above this little red flag right here. We got in at 736. Say we got in at 736. See what would happen. You see that we would get a move all the way up to 753 before the next red candle. Now how you could trade this is there's a setup called the first 1-minute candle to make a new high. Let me go ahead and get my drawing tool. Okay, so first 1-minute candle to make a new high. Right here we got an uptrend, well forming an uptrend, starting to come up. Now this, we were looking for a bull flag, we were looking for a little pullback. Then right here, this area, about 729 is where this candle broke the previous candle's high. That could be an entry on a strong stock, and that's what we look for. So this is a bull flag. So we would take an initial entry at 729, and then we would like to add over this little red flag's rejection. So right here, over 735 would be another add. So we would get in at 729, let's say with 200 shares, add at 735, another 200, so it's 400 shares. And then what we would do is look for a move up towards 750. I say 750 is because 750 is a psychological resistance level. Keep that in mind, guys. So when you have a low, sorry about that, when you have a low priced stock like 750, that's the $0.50 and the dollar are going to be psychological resistance levels. So right here I drew a resistance line, so we know when we're approaching 750. So we would like to sell right in front of 750, so we do not get caught in a little sell-off. So our target is 750. Our average purchase price is 732, 400 shares. So if we can get an 18-cent move, we would get $72 in profit. Now, since our average purchase price is 732, we also want to know where are we cutting losses in case this doesn't go as planned and it goes against us. So we know we're looking for an 18-cent profit, so we're going to need to make sure our stop loss is less than 18 cents, so the risk to reward is worth it. So 732, as we're looking, where should we set our stop? As you can see, this is an amazing setup because we can set our stop 10 cents down. Not even, we don't even need to set 10 cents down. Right here we got in at 729 with our initial entry for the first candle to make a new high. Now we would set our stop at the low of the previous candle, which in this case is 725. Right below the previous candle's low, which was 726, so 725. So we're risking 7 cents to potentially make 18 cents. So you can see the risk to reward is really there. So let's see what would happen. It would come up, it would push up, boom. We would take profits right in front of the 750 level and then wait for a pullback. In this case, it broke 750. It went up a little higher, but we wouldn't want to take that risk because, you know, there was psychological resistance. But it only went up an extra 3 cents before it started to pull back a little bit. And then we got a pullback. Now this is a bigger pullback, so this might be a 5-minute setup, which I'm going to go over right now since we already went over the 1-minute setup. Okay, so here we are on the 5-minute chart. So now each one of these candles is 5 minutes. Ideally, we would want to have a 1-minute and 5-minute chart looking at both of them at the same time. So here we are. Right here, we have it coming up. We have our uptrend. And then here we go. We have a first 5-minute candle to make a new low. So we're watching, but it is an uptrend. So we're looking to get in. Remember, guys, we're looking for that bull flag. So remember what I told you about the 1 minute. We're waiting for a candle to break this high right here of about 753. So right here, we can see at around 753, well no, at 753, once it broke 753, it broke the previous 5-minute before it pulled back. So this would be our entry right here. We would get in at 753 with half a position size. So let's say we get in with 100 shares, and we'd be looking to add at when the volume is increasing and the stock's starting to go up more. What I mean by volume is down here, you guys can see this little volume chart. It's just how many shares are being traded. We want to see volume moving up as the stock's going up and volume moving down as the stock's going down, because that's a very bullish sign. So right here, look at this volume, guys. Just like I was saying about the volume going up, this is an enormous volume increase. So we would look to add to our position here and potentially try and get in as low as possible. But remember, you're going to want to maximize your position size by looking at the 1-minute chart, or sorry, get the best order entry by looking at the 1-minute chart for this 5-minute setup. So we would try and add to our position here, and we would want to get out before 8, maybe with half our position, and let the rest run. Because at 8, guys, you have to remember every whole dollar at these lower price stocks is a resistance point. So yeah, let's say we would sell half at 8 and let the rest go ahead and run. And as you can see, it went all the way up to 1369. So I know some of you might be saying that, oh, like, hey, why would I want to sell some at 8? Like, I should just let it run. Well, in this case, it did end up going to 1369, but that does not always happen. Remember, we're just trying to become better traders, not trying to maximize profit on one trade and then lose more on the next one, you know? We're trying to get good at our system and just have it pay out in the long run. So that's going to wrap it up for this whole entire video. And if you guys are interested in this kind of content, make sure to subscribe, because we're trying to get to 1,000 subscribers as soon as possible, so that way I can do some live tradings, because YouTube doesn't let you go live unless you have 1,000 subscribers. So thank you guys for watching, and I'll see you in the next one.